If you want to understand a little bit more about the quiet revolution in graphite, you need to watch this video. Hello and welcome to our viewers on cruxinvestor.com, and also for those of you new to Crux Investor, or if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. Today we talk to Peter Canterbury. He's the MD of Triton Minerals. They're a graphite developer based in Mozambique, East Africa. Today we talk to him about fire retardants, batteries, the Jinan Hi-Tech financing that they've done recently. It's got to go to a shareholder vote in September. We talk about big flakes versus expandable graphite, plus we discuss shareholders. If you want to look at any of those topics specifically, look in the description below and click on the relevant timestamp. That'll take you to that part of the video. But in the meantime, let's find out what Peter had to say. Good morning, Peter. How are you, sir?
Very good, thank you.
Well, thanks for joining us. You're in Perth, and I notice a big rock beside you. I'm assuming that's graphite.
It is. It's actually from Ancuab. It's Flake graphite in there. It's not that big. It's only probably a couple of kilo sample, but it just is typical of the graphite from Ancuab and the rock formation.
Right. So today we're going to learn about graphite. It's not a subject I know a lot about. I think that's possibly because the Chinese have, represent a large portion of the market, and there's not a lot of companies going around telling this story. So can you give us a 1-minute summary, and then we'll get stuck into some questions?
Yeah. So Triton Minerals is focused on the development and construction of the Ancuab graphite project. It's located in Cabo Delgado province. It's about 80 kilometres by road to an existing container port at Pemba. It will aim to produce 60,000 tonne per annum of high purity, 97.5% large flake, essentially large flake graphite. And its main target market is into the flame retardants and building material industry. And we are all permitted. We've essentially done a recent deal which now is essentially financed and ready to go, subject to shareholder approval, into a construction phase.
Okay, so there's a few things you've mentioned there. Let's start with the first one. I think the front page of your presentation talks about the Graphite Revolution. I mean, I think as I've alluded to, it's a fairly quiet revolution right now. People aren't aware of it. So, I mean, and what do you put that down to?
Look, I think there's a number of factors to that. Is that the main part of it, everyone talks about lithium-ion batteries, and unfortunately, lithium-ion batteries shouldn't be called lithium-ion batteries. They probably should be graphite anode batteries, because there's more graphite in a lithium-ion battery than there is combined cobalt and lithium. So it is an essential ingredient of it, and there is a real cost benefit of using natural flake graphite over, historically they've often used a synthetic graphite in the production of these anodes. And so you've both got a substitution, but you've also got a growth in the lithium-ion battery market, which is really just starting to become real in people's mind outside of China. I mean, China's very real, but it's outside of China, people don't really understand it that much.
Yeah, but you mentioned it. The first thing you mentioned was flame retardant uses, not EV battery uses. No. That's because you see that's where the near term opportunity is for you.
Yeah. So if we break down graphite and look, I think your point to start is people understanding of the graphite market. My background isn't graphite. I'm bauxite, alumina, iron ore. Had some exposure to industrial minerals, but graphite is a bit different. And so what's driving the revolution is a combination of the battery market, and it's not just for the vehicles, but it's also fixed storage. But the other end for large flake graphite, you go into the refractory business, but it's suitable to go into building materials as a flame retardant. You're in London, you've seen Grenfell fire disaster. That had aluminium cladding with a polyethylene foam in the middle of it. If that had 5 to 7% expanded graphite in there, the damage of that fire would not have occurred. And so it's a flame retardant that the Chinese alone think is about 40 million tonnes of flame retardant building material a year required. That, in terms of graphite, is about 2 million tonnes.
So help me, Peter. Before we get too technical and I get lost in the detail, you've mentioned a few bits of terminology that we should probably need explaining. So expandable graphite, large flake. What do all these things mean? So tell us about the graphite market, what you've learned since you've got into it, and then that'll kind of help us moving forward.
That's right. So there's two things that drive the value and pricing of graphite, and that's really linked to applications. If you want the battery grade graphite, needs to be high purity, and it's usually 99.99% graphite, spheronized. But that doesn't need large flake, and it just needs to be very pure.
That's about the processing. So you can take any graphite.
So it's a combination of, you do mechanical flotation, and then you do either acid or thermal treatment to take it from 95 to 99.99%, and then it's spheronized and put into batteries. So the range of what the graphite producers, they'll produce a 95 to 97% graphite, which then will be sold to people who will upgrade it further and then spheronize it.
Right.
So that drives the value on purity. But generally purity, it doesn't sell for as much because there's much more graphite around the world available to be upgraded to that battery grade. On the other end of the scale, flake size is important for expandable graphite. And expandable graphite is generally large flake graphite. It is then the process called intercalation, where they mix it with sulfuric acid, wash out that sulfuric acid, and it just loosens the layer. Then they heat it up to 950 degrees Celsius. It expands by something like 300 to 500 litres per gram. And then it makes things like foils that go into your mobile phones. Here's a foil that's made out of graphite, which essentially goes into thermal treatments. Graphite is one of the strongest materials and thinnest materials alive. But then it could get crushed if you want, and it can go into foams. So here's a flame retardant foam. So if you put a flame on this, it wouldn't melt at all, and that's one of the advantages. So it's a very effective heat sink, and it requires large flake graphite.
So what's the size of these markets, the size of the opportunity of these markets? You're producing, you talked about 60,000 tonnes a year when you get going, but which markets are you aiming for selling into?
So we'll at least about 60% of our production, so about 36,000 tonnes will go into the flame retardant building industry. So that market is small right at the moment, but starting to grow. Estimations, it will be a 1 to 2 million within 10 years, a 1 to 2 million tonne per annum demand, and the environment is that there's very few. In China's running out of large flake graphite, and there's a lot of large flake graphite that sits in East Africa, principally Tanzania and Mozambique.
Right, and who are the main players outside of China? Obviously, I mean, you're at 40 million market cap, or 42 million market cap today, but who are the big players?
so there aren't really any sitting outside of China at the moment. So you've got a number of projects that are looking to develop. So Syrah is producing principally fine flake graphite for the battery market. Outside of that, you've got probably 8 to 10 projects that are sitting in East Africa. We're the only one that sits in Mozambique. The remainder sits in Tanzania. So I would say we're the most developed of any of those, given that we're all permitted and ready to construct.
Right, and I mean, this kind of leads us on to, I think it's page 5 of your presentation, where you talk about the financing for this, because you did make a statement into the market and saying, that perhaps people haven't understood the fact that this thing is fully financed through to production now, and that's down to you. You've got to help the market understand these things. So tell us a bit about the Jinan Hi-Tech partnership that you've created, and maybe get into some of the detail around, why you've done it like that.
So Jinan Hi-Tech are a provincial state-owned enterprise based out of Jinan in Shandong province in China. Mm-hmm. They are a large building and technology constructor, and have decided to acquire our largest shareholder's stake, which was previously Shandong Tian Mining, who was another Shandong-based group, and invest $8.5 million immediately in equity to take them to a 34% shareholding in the company.
Was that a case of just taking out? So do you realise any free cash from that, or was that literally just someone taking out?
Yeah, we get $8.5 million through that transaction.
Okay. What else are they doing? Because I noticed there's a little bit more to it than that.
Yeah, there's a lot more to it actually. So we've spent a long time in China discussing on the financing structure, and what they've agreed to is support the financing of the whole project. Mm-hmm. So that'll take 2 forms. One is, firstly, as part of our EPC contract we signed with MCC International, we have a letter of intent from China Merchant Bank for 85% of the EPC contract value, or about $40 million of $40 million in concessional financing. So that's we're talking about LIBOR plus 300 basis points of 5 to 6% financing, which is pretty attractive. And the other thing that Jinan Hi-Tech have done is they've actually they own a leasing company, and they're going to finance all the equipment through their leasing company. So that realises another $35 million of financing in there. So between the two, we're talking about $75 million plus, and this is US, plus another $7 million that they're putting in. And that's pretty close to what our CapEx number, which is around about $85 million. So we are, and we have a number of other conversations going on with other parties about project investment, which we've announced MOUs on. And so we are now in a position when we're not looking to go into the market to finance this project.
Let me understand. So you're getting $8.5 million cash. They have spent another circa $11 million to buy out Shandong Tian Mining. Yeah?
Yes.
That will give them, post-acquisition, I appreciate it's got to be approved by the shareholders in late September, but that'll give them circa 34% of the company. Management own 35%, circa. Management
and Hi-Tech. So that's that. So the management outside of them own about 1% of the company.
Got it. Okay. So it's unclear in the PowerPoint. I couldn't quite work out what that meant. Okay. So what's the kind of free float for the retail market after this deal?
So we'll have 1.1 billion shares on issue. They'll control 370 million. So you'll have a free float of 700 to 800 million shares.
Okay.
And and we're a pretty liquid stock as well.
Well, are you? I mean, so what's your average daily trading numbers?
We, in a normal term, we turn over probably 2 million shares a day.
Okay, I'll check that out. So what's that? That's about 100,000 Aussie a day, roughly.
No, less than that. Yeah, 50, 5 cents, 50,000.
5 cents, right? Yeah. Okay. You've obviously, there's a bit of a history to this company. You've come in 2.5, 3 years ago to kind of help change things and turn it around. What was happening back then, and what have you done?
So look, I was approached to take the company out of voluntary administration. It went into voluntary administration in March 2016. There's a number of reasons it was put into there. I don't think it probably should have gone in there, but there was some uncertainties around which we've made certain since we've taken over. So I was, because of my experience in negotiating mining conventions and doing development in Africa, I was approached to take on the company, which I did in September 2016. We took it out of voluntary administration and relisted in December 16. We completed a DFS by the end of 17, with a reserve, shows a 27-year mine life, have sold 50% of the production out, binding for 5 years plus a 5-year option, appointed and signed an EPC contract with attached a letter of intention on financing, have an environmental permit issued, have the mining concession issued, and now announced the actual financing, transaction, strategic partnership with Jinan Hi-Tech. So it's been.
You've been busy. Here's the big question for you, Peter: is how many shareholders are underwater in all of this? I know you've done this deal, okay, and as you say, if you start telling the story properly, people should appreciate it. You've done quite a good deal. It's non-dilutive moving forward. Great deal. Assuming nothing changes. But a lot of shareholders are underwater right now, and doesn't that overhang cause you a problem where, as if the share price starts moving, people are going to be selling out, aren't they?
But if you have a look at there is a risk of that, but we're the only graphite project that's permitted and financed, and will be the next high purity large flake graphite producer in town. Long life project with excellent economics on the project. There's an opportunity to have once financing's all through, is re-rated and enjoy the opportunities that it presents.
Yeah.
Look, there's we haven't, graphite's a pretty hard commodity to be in, and we've done pretty well. They're frustrating. Our share price hasn't reflected its true value, but a lot of our shareholders want to see this go into production and get the benefits of a producing asset. And the advantage we have is that it's only an 18-month construction period, which is short by processing plant and mining developments. And so it's an opportunity to hit the market when the market is projected to really take off.
Well, there's the point. I think your shareholders will hang around if they believe the macro picture, the supply-demand gap. So, seen a lot of information suggest that there will be a gap if, based on current planned projects, and that's assuming no new entrants into the market. So they need to believe that. I don't necessarily think they're waiting around for you to get into production. They're waiting for the share price to move so they can make some choices. Whether you get into production, if that's the catalyst, brilliant. But they're looking to you to provide confidence that this deal structure that you've created is going to deliver that. Because I agree with you. 18 months is a very short period to get into production. When you get in, and when I know you've got the shareholder vote late September. How quickly after that do you start seeing this money?
Within a couple of days.
A couple of days, right? You heard it here first, folks.
There is the $8.5 million will be transferred. I think it's within 5 business days of the shareholder.
Right. So how are you for cash today, by the way?
Jinan Hi-Tech, this thing's gone on longer. We've been running down our cash balances, but as part of the transaction, Jinan Hi-Tech have provided, through an associate company, a loan until the shareholder approval, up to $2 million of working capital, what we need to do. So we don't need to go into the market to raise any funds, and even post-approval, and this is where you talk about, free float, and unlike most others, we're not going to have to issue a whole lot of script. That's going to be just a wash on the market. What we're going to, and the share of Jinan Hi-Tech, it's not going anywhere. It's going, it's not going to move. It's not going to be traded. So you're going to have a much tighter, in terms of structure, in terms of, ability to be a wash with people selling as the price increases. I just don't think it'll happen yes, some will sell, but I don't think it'll be, I think there's a lot of people who are waiting to get in, who want to know the certainty that you're going to be a producer.
Okay, so if that $2 million, that's kind of a bridging loan, as it were, until your 8.5 comes in.
Yes.
So it's not 10.5, it's 8.5 in total.
Yeah, no, we really that is out of what we've got. So,
right, and how much?
We're not burning much at this point in time. We're waiting on that to then move. So we've cut down. The market was very difficult in the second half of 2018, and first half of 2019 wasn't much easier. And we took a decision in around September last year to cut down the activities we're doing. And we started negotiating with Jinan about a year ago. And so we knew where we were trying to head on this, and we've now got to that. And so we've managed our cash to get through that process, and I think we're in a good position now.
Why does it take a year?
Look, they will have to do whole due diligence on, and things in China don't happen quickly on things, and it needed to go through approvals, and it's it takes a while. So I wouldn't say our first discussion happened about a year ago.
Right.
So, and we had to go through a very detailed due diligence process. They've got a very good understanding of where the project sits. They wanted to see some of the things that we got in place in terms of the mining concession be in place, and that's now in place, and we're ready to go.
So at 34%, it's not a controlling stake, but they can make things difficult for you if they wanted to. I'm assuming we're going to start off, the relationship's going to be good and strong, but are they controlling things like director remuneration, like the way you incentivize staff? I mean, how much say do they have on that, or have you got complete autonomy?
And what we've announced is that they will have equal board membership, but they will not have control of the board. And so if there's any things that need to be, we can't get through at a board level, we'll take it to the shareholders. And if it involves them, they're essentially, we can take it to the shareholders and get resolution through that. It's not. Look, we'd rather that not happen, but in China, that's quite a common. In fact, in China, they would have then control. They would normally have control of the board. But so they've been, they have some desires, but we've been able to get to a point where we've got them sitting in a position where they have a very important say. But given their bank guarantee guaranteeing the financing of this, one needs to be, cognizant of that they are very much a partner in this.
Well, absolutely. Plus, I note that you pre-sold 50% of your production, assuming it's to your partner.
No.
No? Who's that
to? Two other Shandong-based existing graphite producers.
But are they state-owned? Aren't they all part of the same thing?
They're not state-owned.
Okay.
These are private groups.
Okay, fantastic.
And they're existing producers who are running out of large flake graphite.
So what are the terms of that contract then? Because that interests me, because I assumed that at 34% they would want to get, take a lot of your offtake.
No.
Right, so tell us about the terms.
Yeah. So these, we've got two contracts, both for 16,000 tonne per annum, 5 years plus a 5-year option at our option. One of them has a floor and a ceiling price. The other, but they both meant negotiations with the prevailing market prices.
So you're saying your Chinese partner is taking a 34% stake. They're playing the equity game, not access to the commodity.
Yeah, I think they have a longer term view that they may want to do some value adding to the remainder of the material into the marketplace. They're a building company, so they want to, the flame retardant and graphene as well are very interesting to them. So they have a view that there's some value to be added.
How?
Later on.
Meaning what?
They'll do some further processing plants, possibly in Mozambique, on that.
Oh, okay. And would that be part of Triton, or would that be a separate vehicle?
We haven't had that discussion yet.
Okay, early days.
It's their desire to have an interest in it, and it is because they understand how big the large flake graphite market could grow, and I suppose you've got to put it in context that Shandong province is the major large flake graphite producer in China, and they are running out, and they have environmental challenges, and so the opportunity to get their foot on some large flake in East Africa. And the advantage we have with NQAB is that we have an existing large flake graphite producer right next to us called GK Graphic Pump, owned by AMG. And so there's existing production coming out of that same deposit.
But let's come back to you. So you've got 50% pre-sold to two Shandong private enterprises. The other 50%, that's also going to Shandong some way or other, is it?
No, it's not. It's unsold. It's unsold at this point in time, but we will have discussions future. And we've deliberately not sold it because we want to have a look at the value, value adding prospects going forward. We could sell it today if we wanted to.
But that's my point. Why would a Chinese company come in and take a 34% position without wanting access to the remaining 50%?
Because they see the opportunity of potentially doing the value adding and potentially using that 50% on a sale in the future. So they don't necessarily wanting us to sell that remaining 50%, but they're happy that existing graphite, it adds confidence to them that existing graphite producers want our material.
Right. Okay. So there's a discussion that you may have in the future, because I'm trying to work out how that remaining 50% adds value to your business other than selling it in the open market. If you can process it, or your partners can help you process it, or you can be part of a joint venture and process it, I can understand they sort of upsell. There's benefit to shareholders there. But at the moment, that's an unknown, is what you're saying.
Yeah, at the moment, their interest is they can see a market and they can see their equity interest growing. So it will add value, it will add cash flow to their business. But they have a larger, longer term view that this is a market they should be in, given they are a building company.
Does that longer term view involve giving you more money to go and buy more assets?
We haven't had that conversation.
Are there assets for grabs in Africa that you know are available that meet your criteria?
Yeah, there's probably a few assets sitting in Tanzania that they're trying to struggle to work out how to finance. And look, it's a difficult situation sitting there, and that's why we're very fortunate to be where we are with a government that's quite supportive. I mean, Tanzania, it will get solved eventually, but it's got some issues at this point in time, which will delay development and put it in doubt of how do you finance with an unknown sitting in there that the government is trying to wrest control of some of the assets, trying to get a larger share of the mining pie.
Yeah, I think that's making a few people nervous, as long as it doesn't spread, I think. But that's my point. I think with this partner of yours and their access to cash, you may have a lot more options available to you than some of the other, let's face it, much smaller graphite explorers, developers.
It's a good question, because I think it actually, there is that opportunity, but I don't know that today. But they are very, they're financially very strong group.
Absolutely. Okay. We said at the beginning, it's your job to tell people how good this financing that you've done is. It's not complete yet, but if you get it over the line, it's quite strong. Okay, but let's talk about Mozambique, because it's a country I've been to, and Tanzania, which you just mentioned as well. Great people, very friendly people, nice place to do business. The infrastructure is good. It's relatively flat. You've got roads, you've got power, got a port. All this is good stuff, isn't it? It keeps your costs down.
Yeah, so we're one of the closest. We are the closest graphite project to an existing port. So Pemba is an existing port with spare capacity. It's not the best container port in the world, but it is a container port. But it's got capacity, and it's 80 kilometres away from where we are. We don't need to develop the roads, because we've got a sealed road directly from the edge of our tenement or mining concession, and so we just need to build the road from there into the actual plant. In terms of electricity, we have 110 kVA power lines running through our tenement. There is some work to be done at the Matoro power station substation. They've actually just announced this week the construction starting on a 40 megawatt solar station there, and an upgrade of the substation there. And that's finished, we will have access to grid power, and which is very good.
Okay.
So it's not an infrastructure play. And I think your comment about East Africa, and it's a good place to operate. People are good. You've got good legal systems. You've got good accounting firms, legal law firms. Compared to other places that I've operated in Africa, is that it is reasonably good. Pretty good education system. And you've got a government that's sitting there with big gas projects sitting out there. They've worked out that the way to move their country forward is supporting development. So the president's opened CIRA, it's opened GK. The president is from Cabo Delgado province. They're pushing Anadarko, or soon to be Total, as gas project. ENI and Exxon are going ahead now. It's actually, after a few hard years, Mozambique is starting to move ahead very well. And one of the reasons we chose MCC International as our EPC contractor is they have constructed in Mozambique as well. So that's advantageous.
Yeah, it's open for business. So, Peter, I'm going to let you finish off and tell current investors why it's going to be okay, and also new investors why they should come in.
Yeah. So for all investors, I mean, we are now at a point where we are going to be the next graphite producer in the world, a 60,000 tonne high value large flake graphite production in near term, 18 months. And we're now put a structure in place that essentially finances it. It's fully permitted, has an EPC contractor ready to run who's experienced in there. We have an owners team ready to run. We have offtake agreements in place with over 50% of the production. This is now real. Triton will be a producer, and we are, it's a very exciting time to be in, I think, to invest in Triton, but it's also a time where you will start to see the graphite market become much more visible in terms of the demands that are going to come, and become a very, higher than average growth rates over the next 10 to 15 years.
Okay, so the quiet revolution is going to become loud and raucous.
The reason we got the name Revolution was really about the electric vehicle revolution, storage revolution, and it is a, the world is changing from that perspective. It's just coming a lot quicker. It will come a lot quicker than people think. But having gone through that and spent a lot of time in China, you were seeing it's actually quite real there. But the other side of, for us, the flame retardant building materials is real. I mean, you're just having these inquiries that are telling how many buildings that have to be retrofitted. You're changing codes in various parts of the world, and you're also getting materials banned. Like bromide is no longer allowed to be used as a flame retardant because of its carcinogenic nature. You've got graphite, which is completely inert, and it is one of the best flame retardants in the world. So I think it's an exciting time to be in graphite, and even more exciting time to be in Triton.
Peter, appreciate your time. Thanks for educating us, and thanks for the introduction to the company. It's been a pleasure listening to it. Keep us up to date, and we'll speak to you soon.
Thanks very much. Appreciate that.
Thanks very much for watching. We hope you enjoyed that, and if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.